All right, guys, welcome back to Reaction Points after a brief hiatus there for the holidays. We're going to kick back here strong in 2026 and start doing these on a consistent basis to show you exactly what you need to be looking for and how to do it, how to execute, because it actually works. So we've got a lot going on here on this chart, but I'll break this down here for those that might be newer to the channel. So we have our key sessions here marked out or boxed in different colors. We have the Asia session boxed in blue, the peach section here, or the European session boxed in peach, and then the New York session boxed in green. And then we have a darker shade of green boxed here. This is the 30-minute opening range, a New York opening range, 8:30 to 9 a.m. Central. Okay, so this entire methodology strategy will work regardless of where you sit down and start trading. I'm primarily focusing in the transitionary period between the end of Europe and into New York, focusing on the New York AM session and the New York PM session. So let's start breaking down today's activity. You'll notice that New York was not able to take out the European lows. The European lows did take out the Asia lows. And then as we started here in the opening round shuffle, that I like to call it, you'll see that we immediately blasted off here up to 69.57, taking out both the Euro highs and the Asia highs. You can see the dotted lines there. You can also see those box ranges there for further reference. And then now what we do is we look up and see where price has a high chance of reacting. So we're blowing through this level here, which was the prior day high. And so as we're blowing through, we're not looking to take shorts yet. We're wanting to see what is the next level overhead that we have that we could come and target. And you'll notice the dotted line here is a 2-week prior close. Okay, so I know prices compressed together. I'm just trying to give you the bigger picture here. Then we'll expand out and look at the opportunities. So not only did we have the weekly prior week close here, we also had a key level of 69.80. Now, this was coming off one of our 4-hour key levels. So what we could do is kind of put that on the chart here. That is right here at 69.80. And you can see the reaction that we had. So your first opportunity was right here. You can see we got through the 30-minute range. And actually, we got through the first hour. And we start to see the market roll over. Now, if you look down at the bottom pane, this is our momentum indicator, all showing signs already, or giving us warning signs that we're getting weak. And you see our averages starting to roll over here, and we see a 3S code plot there at 65.75, and it takes us right back into this entire area right here, where you can see price stalls and then goes higher. Well, what are these levels here? The two average looking lines here that are sloping. The purple is the 200 EMA, the 200 moving average, which we know has a lot of significance. And then the turquoise line, the thicker turquoise line, is the VWAP, or volume weighted price average. Okay, so our volume weighted average price, and this serves as a magnet. So this is why we have all these levels of confluence added. They serve as targets, as also where there could be new areas for price reaction. We also get divergence buys down here as well, telling us that any shorts that were taken need to be taken off the table, or at least stops tightened up. We come back and visit again. The rest of the day is a little bit tricky. I'm primarily not trading here between 10:30 a.m. and 1:30 p.m. That's when I'm typically away from the desk, or at least not trading. I'm looking to take the A+ setups here in the morning, and the rest of the day was a slow grind. So you'll notice that we have what's called 3S code signals. These are one of our timing reversal indicators. We also have many divergence indicators as well. It's going to happen as the market keeps checking higher, and our oscillator is making lower highs. So higher highs, lower highs, that's divergence. That's why you're going to get signals. Now, one method that we teach in our mastermind is called the flip and break method. And by doing so, following and tracking these swing lows on the way up will keep you from shorting this market and getting stopped out, trying to short the market, getting stopped out. In addition, Once you're through the prior week highs, yes, you would normally be anticipating a potential reversal or reaction, but then we look up overhead and we've got the prior month highs as well. Now we're just late into the day. It doesn't make much sense trying to take the trade. Let's go and look at a couple of other markets here. Crude oil, strong trending day. We had a $2 reversal there off the highs. Our key level today in crude was 58.65 on the upside, 58.65. You'll see that that was right here, 58.65. There we are. And so we just kind of had a small range grind here in the first 45 minutes, and then we started to break down. Okay, so we broke down, doing so there in the first 30 minutes. We're taking out Asia lows. We're taking out Euro lows. You can see that right there with a 3S code buy, and we popped right back up to those same two lines that we saw on the S&P. Purple line, 200-day moving average. Blue line, VWAP. You can see the rejection, and that keeps price suppressed through the rest of the day. Now, the break and flip method, again, in the opposite direction would keep you from trying to buy crude oil, just tracking the swing highs on the way down, letting price confirm. Now, it's not just requiring a break of that swing high. We need to do so with some impulsive movement, which we do not see. The only action we kind of get here is in the last 30 minutes of the day. And then by then, the day is over. No use in trying to play crude oil. Last market here, gold, been a wild animal here of late. You can see we pushed up right out of the gate here in the first 30 minutes of trading. We quickly took out the Asia and European highs. Look at what would happen here in Europe. We took out the highs by a tick and then reversed. And then we come into the New York session. We blast up, but we don't have anything above, okay? So yes, in hindsight, the 3S code would have worked. We need some other key levels to give us confirmation. We don't have anything until we get up into 45.60, 45.80, which would be that all-time high territory. So trying to short this market would have been a mug's game today. You had been looking for buys and retracements because the overall trend is higher. That's going to be your higher odd trades. So what are we looking for? Here's a pullback into the 200-day, right into the VWAP. And we also are pulling back into the New York Open and the Midnight Open, get a nice reaction, and then it's off to the races the rest of the day before settling for range-bound activity. So I hope you like this video. First recap here to start 2026. If you like this video, make sure to smash that like button, give it a thumbs up, provide a nice comment or piece of feedback that lets me know that you are listening and paying attention. Good luck, good trading, and we'll see you on the next update.